The banking crisis. Why are we here? How did it start? First, the Federal Reserve has increased interest rates over the last year in a dramatic fashion, going from 0 to 5%. That obviously had some effects, and it's been effective. It's been starting to slow the inflation train that we've been worried about from a peak of 9% to 5-ish% today. We expect that to continue to come down. But the side effects of raising rates rapidly has induced some stress into the banking system. So far, we've seen 3 major banks fail. So for a little bit of context, how do banks work and why does this happen? First of all, when someone places a deposit of, say, $1,000 into a bank typically takes that money and then lends it out to those folks that need a loan to support a car purchase, a home purchase, or to support their business. Typically, that's about 70% of that deposit. So $1,000 put in, $700 gets lent out. And what happens in case of panic, where there's maybe some issues at a bank, maybe they lent out to some customers that have found some struggles and are now having some difficulties in paying back those loans, or they invested in marketable securities and there's some interest rate risk and those prices are suppressed. Now when that customer wants its $1,000 back because it's concerned and wants to place that either in another bank or buy some treasuries with it, the bank doesn't have all $1,000 available. So we call that liquidity risk. The other, where someone can't repay, is called credit risk. And we have really a confluence of both of those. So if there's not a bank in our system, except the Federal Reserve Bank, that's immune to what we call a bank run. When all depositors want to take their money out at once, well, the money has already been spent on issuing loans to customers. So typically, banks on average issue about 70% in loans, maybe 20% is in marketable securities or bonds, and then about 10% is cash. So any deposit run over 10% creates liquidity issues. The Federal Reserve is in the background to be able to provide that extra liquidity, and that extra liquidity, as long as that's available, makes those banks sound and able to meet depositor demands. So with that, that's a quick wrap up of the banking crisis.